Hi, I'm Tony Richard Preston, Principal Advisor and Managing Director at Clara Wealth. Today we'll be looking at PSS and redundancy. Before we get underway, a general advice warning. The content in today's video is general advice in nature and does not take into account your personal situation, needs or objectives. The PSS is a defined benefit scheme. It has different rules to standard superannuation funds and is recommended that you seek the advice of a qualified and licensed financial advisor. So today we'll look at the redundancy calculation formula for PSS, the calculation of the final average salary for redundancy, which is different to age retirement for PSS, your redundancy options available to you, and we'll look at a redundancy pension calculation. So to calculate your PSS redundancy benefit, we look at your final average salary. This is calculated differently under redundancy compared to age retirement. Your accrued benefit multiple, and that will give you a benefit accrual. So final average salary multiplied by accrued benefit multiple equals your PSS lump sum benefit. Now let's look at the PSS redundancy calculation. The calculation is different to age retirement as it takes into account a pro rata salary up to your redundancy exit date. For example, Anna is 52.5 years old when she is made redundant on the 31st of December 2020. The difference in her FAS is as follows. Ordinary FAS is reported as the average of her salary on her birthday for the last 3 years, or $97,000. Redundancy FAS looks at a pro rata amount from the 2018 financial year, as well as an amount for the 2021 financial year. This gives her a final average salary of $98,008. PSS redundancy options. There are up to 6 options for redundancy under the PSS, depending on your circumstances. The first option is to preserve all of your benefit. This can be a good choice if you're planning to return to the APS or a PSS contributing employer, as it allows you to rejoin the PSS. Take a maximum pension. This is useful when you're not planning to return to a PSS contributing employer. The benefit of taking a maximum pension with a PSS in these circumstances is that it's not subject to preservation rules. Therefore, you can access a PSS maximum pension regardless of your age. However, if you do rejoin an APS employer, then you cannot rejoin the PSS. Take a part pension and a part lump sum. The lump sum in these circumstances is limited to the CIS upper limit and is only applicable if you're a PSS member as at 30 June 1999. Under this option, you cannot rejoin the PSS. Option 4, take a full lump sum. Here you can access a cash amount up to your CIS upper limit, if any, with the balance needing to be rolled over to another complying superannuation fund, if under your preservation age. You cannot rejoin the PSS. Option 5, part lump sum with balance preserved. This is only applicable if you have a CIS upper limit. The pension option is forfeited, however you can rejoin the PSS. Option 6, transfer to an eligible scheme. There are 9 eligible schemes that PSS benefits can be transferred to. However, you must be working in the future for an employer sponsor of one of those schemes. Now let's look at a PSS redundancy pension calculation. This calculation uses the same pension conversion factor as age retirement. It's based on age, pro-rata for the number of days also past your birthday. In Anna's case, her ABM is 6. She's 50.5 years of age. Her final average salary is $98,000. Her pension conversion factor, pro-rated, is 12.9. Therefore, her lifetime index PSS pension at redundancy is $98,000 multiplied by 6 divided by 12.9, which gives her $45,581 per annum. So why choose Clara Wealth for your redundancy advice requirements? First of all, we are genuine fee for service and will provide you with a fixed price quote upfront based on the complexity of advice required. Secondly, I have over 22 years experience advising PSS members on redundancy benefits, retirement planning, non-super investments, as well as tax planning. Clara Wealth is privately owned and operated. We're not owned by a superannuation fund, bank, life insurance company, or any other financial product service provider. You're entitled to a free 15-minute initial phone consultation and appointments are available online, face-to-face, or by telephone, both nationally and internationally. To book an appointment, please visit our website, send us an email, or give us a call. Thank you.